Hi, this is Randy Finney with the right side of the chart, and this is a late session update for Thursday, September 19th, 2024. It's 3:32 p.m. I'm starting the video. Most of you probably video it out, and just keep in mind, remember that anytime you watch these videos or any video on YouTube, you can click that settings button and change the playback speed. I like to listen to anywhere from 1.5 to 1.75 on most videos, especially if they're a little longer. Cuts down the duration. You can always stop, rewind, change the speed back down. So that'll get you through them a little quicker. Either way, this is what I do. There's just so much I'm seeing today. I want to get this one out. And there were several questions on the comment sections today, and I've made a point to keep up on those, and I believe I've answered them all up to this point, and I'll get over that. There were some good ones, so I want to share that. I just want to start out with trade updates. Very timely entry so far. Nothing big, but 3% lift. We went long right there at the this morning on the intersection of the symmetrical triangle pattern there. You've got the uptrend line, which is coming in right with the downtrend line, and that 2.38 support level. So it's been a 3% lift so far. There's UNG. You can see we're right there down at the lows today, and so we're lifted up about 3%, a little better. And again, this is still, you can bounce it around in here in this range until we break out. So far, the MO has been come up to the top and go to the bottom, but sooner or later, no trading range lasts forever. You've got this potential W basing bottoming pattern, and we could break out at any moment. So I'm really not leaning towards a move down towards the bottom of the range again. But if we do, I'll give you some suggested stops, and you can manage that. Let me, before I get to the questions put to me in the market and everything else, somebody asked me to do an update on the Mag 7s. I will do that, but I wanted to let you know that I posted in the comment section below those. I gave you 3 individual stocks. They were the top 3 components of this sector called specialty finance. You can see my component watch list here. I give you Rocket, RKT, UWMC, and COOP. I added, and I meant to include it initially. I also didn't want to overwhelm you. I know, like I said in that post, so I know most of you won't take that. Nobody wants to short today. Everyone wants to buy, and that's just my style. Just like I said, everybody wanted to buy the NVIDIA when it made an all-time high. The day it put in a bearish engulfing candle, they figured buy the dip. And like I said, it either works out or not. But again, I can't emphasize just how objective those are. These are some of my favorite trading patterns, these bearish engulfing. You got to know when to look for them after an end of a prolonged uptrend. And again, your downside is so minimal compared to your profit potential if the targets are hit, because you just, if it's a bearish engulfing candle, which is a potential reversal stick, you just have to have the body of the candle engulf the previous day's candle, which we clearly have done, and with 25 minutes left to go, Rocket would have to rally back up, to get to the bottom, above the bottom of yesterday's candle. It would have to rally 6.4%, and probably not going to happen. Anything's possible, and if it does, then you can decide, if you want to stop out at that point, or just, I would just keep the stops in place right above yesterday's highs, because then that invalidates it, and there's also the divergent high, or you could put the stop above, today's high if you want a little tighter. We'll see. Again, and it's got to take, by the way, I listed this T1, S1 because it's not very far now. So S1 means support. It's also a benefit of the doubt support level that if and when that goes, it'll open the door and increase the odds of these bigger targets going to be hit. But what I wanted to get at, that fourth one that I didn't include, but I did in the post, but I did follow up in the comments section, just a nice looking chart, PennyMac Financial, PFSI, and you can see the levels, pretty self-explanatory. This is your primary uptrend line, which is T3. That's why I colored it yellow. We have this minor uptrend line right here, which comes in with price support. So that's T1. It's the intersecting. It's first of the, it depends how you get there. If you do this and go around for a while, you're going to get there at the same time. If you got there tomorrow or, early next week, you're going to hit T1 price support first. And if you overshoot it, you have the trend line just below that they'll probably buy. So that's support. Then once that goes, T2, T3, T4 and T5. So it's and what I like to do too, it either works out or it doesn't. But you would consider if you took the 3 or even this 4th one. If you didn't, like I said, that's fine. Never take a trade you're not comfortable with. But I like taking a shotgun approach to a sector. Let's say gold mining stocks or silver miners is a great example. When I'm bullish or bearish, I can go just keep it simple and go with GDX, right? Or I can do a shotgun approach where I go with 3, 4, 5, 6, 7 of my favorite picks in the sector and weight them accordingly. And if that, so let's say I'm bullish on GDX and I pick 1, 2, 3, 4, 5 miners that have the best outlook, chances are I'm going to outperform GDX if I get the call in the sector right. By picking the most bullish charts and ignoring the most bearish charts. When you go with a sector ETF, it's a shotgun, very much a bigger shotgun approach. You're getting the whole sector there and the good and the bad. It's just like trading the S&P 500. It's the same reason the S&P 500 goes up and down less than the NASDAQ 100. It's diluted. You've got the 500 of the 500 largest companies in the U.S. You have the best looking, most bullish charts and price action when you buy the SPY. And you also have the dregs down there in the bottom 500. NASDAQ 100 is a little more concentrated. And plus, the NASDAQ 100 has a higher concentration of growth companies anyways. That's one reason it goes up and down more. So it's also a little less diversified. Okay, that's that. Let's move on to... Well, let's go to questions first, because usually others will have the same question. Somebody asks an update on the VIX. Look, I don't have a very strong opinion. That question I replied in another under another comment thread. Here's the 60-minute charts of the VIX. What you can see here is the VIX. Remember, we're coming off this big divergent low at major. That's long-term support. You don't even see it here on the chart. It goes back to the left of the chart. Very good long-term support. And we had that explosive move. We caught it, got in right before that move. Milked a good part of that run up, and you can notice the VIX come down. This was the former support level back here in 2021, right before the market peaked. Remember, this is when the NASDAQ 100 peaked in November 2021 and effectively put in a slightly lower low, but almost a double top right in the beginning of January 2022. That's when the S&P 500 peaked. And so that's the same support level we fell to back then in November when the NASDAQ peaked and again in January when the S&P peaked. So it's a support line I've had on this chart for a while. We're there. And so the S&P is making new highs, yet we're still well off the previous lows, which was a big divergent low in the S&P 500. Again, I don't have a strong opinion, but as you can see here in this, this chart here, I said, let me go back to it, I'm trying to get that thing away out there. Okay, so I said the VIX on the 60-minute chart, you have a little minor uptrend line here. Remember, this was a divergent low. This is where we went long before, broke out of the bullish falling wedge. The VIX screamed, and it's come back down. Remember, the VIX will move opposite the stock market. So the VIX is down today, rightfully so, because the stock market's up strong. Remember, the VIX tracks the S&P 500, not the NASDAQ 100. It's based on put and call buying. However, we're at support. And it's simple, and I don't have strong conviction. I can easily see, which I'm about to get to, a little more upside in the S&P 500. And so it's simple. The VIX will either rally and possibly sharply higher if today's breakout fails. That's a big condition. That hasn't happened yet. But if it does, then yeah, the VIX would likely shoot up. And because the market will continue to fall. If I'm talking about the breakouts above the downtrend lines, I'll get to those in 1 second. Or, we're going to continue. The VIX will probably continue to drift lower to any or all of these support levels if the stock market, especially the S&P 500, continues much higher. So that's it. It's going to do one or the other thing, but I can't make a, case to go long the VIX right now. Just like the stock market's the same thing I've been saying on the market, which is going back to those previous questions. Let me close this out. Let's see, view comments. Well, let's go back to that one that we had here. Let's go back. I think I was in this thread. Oh, wow, we've got more now. Maybe that's because I answered. I think it was at 4. Update the VIX. I just did. Okay, this is a good one. If the breakout on SPY sticks by the end of the day today, where do you expect QQQ to go? So it's a great question. I covered it in yesterday's video, but I don't mind repeating. I do know that my videos are long-winded and you gotta have a lot of time in your schedule to watch them all. Again, fast forward if you want to. But again, ask those questions. So yes, in yesterday's video, laid out that if we got 25 basis points, I thought the market would be upset and tank. And if we got 50, which was also, we had a twice the chance to get a 50 basis point. Remember, it was a 2/3 chance of getting a 50 basis point cut, so it wasn't a surprise. And only a 1/3 chance, or 35% or so, that the VIX would go, we'd get quarter. So we got that. We got what was expected. And as expected, that would be bullish and likely trigger a breakout above the downtrend lines. And I'm talking about on SPY, QQ, and SOX. I'll try to loop those in, get to those in a minute in case you missed them yesterday. I've been covering them ad nauseum lately over the past week or two. So we got the breakout, and it's certainly impulsive, and we're well above them. You don't have to squint to see it. It's not the day of the Fed meeting. We had two whipsaws, yesterday leading before, or one the day before and one the day of the Fed meeting. So that was my scenario, and still is, that would take likely to take SPY up towards the top of its final market top range and make a new high. That was what I said would most likely happen with a 50 basis point cut. The S&P 500 break out to new highs, or break the trend lines and go up to my final market top range. I'll cover that many times. I've covered that range many times. I'll cover it again. Okay, so however, based on the percentage gain, and this is again what was covered in yesterday's video, based on where we were yesterday, and the percentage gain to get SPY up to that top of that range, which was only about 3% yesterday before the rate cut, I projected QQQ, just knowing how QQQ moves up proportionally to SPY, just a little more on a good day. SPY, if the S&P's up, like right now, the S&P's up 1.7, or the futures I'm looking at on one chart, 1.74% on the futures, 2.7% on that was on the S&P futures, 1.7% and 2.7% on the NASDAQ futures. And that's usually what you get. The NASDAQ 100 is higher beta. Risk back on, boys and girls. Fed Uncle Powell's gave us, he started things out with a bang, and he promised more to come. So yeah, you're going to have Bitcoin. You're going to have, the NASDAQ's going to outperform. Risk on things will outperform on a day like today. So that's kind of a given. However, so based on those projections, which I'll go over again, that would take us up to maybe the top of the range, which was always and still is my preferred market top point for the S&P 500. And QQQ now, remember, already hit my preferred market top range. NQ hit it to the button. I was calling for a move up to, what was that? Trying to remember, 21,200, I think. That was the preferred market top range in that area, 21,200-ish, I said, and we hit it pretty much within a fraction of a percent. And the NASDAQ 100 came real close to the top of the range. So they already hit and reversed. And they're lagging behind because, remember, again, I was adamant to short the NASDAQ 100 on that 16% drop we got off the highs, not the S&P. I expected the NASDAQ to significantly outperform, and it did. The S&P fell less than 10% off the highs in July, and the NASDAQ 100, which we were short, fell 16%, and then we covered the lows there. And now, because of that, here, let me get to the charts. Because of that, it's, even though NASDAQ is rallying more right now, risk back on, it's still well below that high. And remember, this is just like what we just shorted on those. Those are the bearish engulfing candles I was talking about. SOX, semiconductor, put them in. QQQ, put it in. SPY, I believe, even put one in there, if I'm not mistaken. And big red bearish engulfing. So like I said back then, they're just super great little patterns of short. We tried on here too, and it's no big deal. If you go down, your loss is minimal, especially on the indexes. They're talking about at most, if you wait to the end of the day on a 3% down day, you got about a 3% stop loss to milk out a 16% drop, which, not only did we cover with impunity at the lows, but we milked these two, or milked that middle, actually both those counter trend rallies along the way. We milked that one and we milked that one, the two big ones. So really it's like a plus 20% trade. And now that's, again, the same logic with those other two sectors. And what I was trying to say is, nobody or very few wanted to short that day. Dip buyers, as they say, buy the dip. That was the biggest single day dip you had in a while. So, the dip buyers would have done what they do. They would have bought that dip, then it would have bought the next day. They would have bought, and then they would have started to say, "Ruh-roh, something's going on. I keep going underwater. What dip do you stop buying?" And what happens is dip buyers and trend chasers, they'll buy the dips, then they realize something else is going on, then they stop buying the dips, so they're underwater, and then they start wanting to short at the end there, and that's usually, just dip buying. Everyone's a genius in a unidirectional uptrend. Buy the dip. It works, but not in a. This is a topping market, guys. This is a swing traders market. Last year or so was mostly a great 401k investors market to put away, keep putting money in, buy every dip. And obviously, I don't have to tell you this. You can see from the swings here. You got to be in out, and flexible. And so that's where we're at. So going back to the ranges, I'm sorry, that was given to, I see I truncated the chart. I'm back on, I need to slide it back over. That was back in late June. Zoom in nice and tight in purple box. I believe you can see it in the video. Market top range was right here. Give me a purple box. This was my market top range from here to here. QQQ came with 1.5%, but NASDAQ 100 hit right to the button. And so again, we've already fulfilled. Now we could go up again, and if we go much above 512, then I'm wrong. Then my call for a top, again much above. If you go up 1%, you can sit there and argue that close enough. But either way, I don't think that's going to happen. So yesterday, back to the question, in yesterday's video, based on where SPY was, let's go back to SPY. We were in the middle of the range, which we've been capping out lately. Let me just flip over to a daily chart. Same range here, final market top range. We were here. Boom, 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 right smack in the middle between the top, which is my preferred, and always was, because that aligns better with the Fibonacci retracements, as I covered in recent videos, in the bottom of the range. So SPY stopped in the middle of the range before, and so that's why yesterday, and with the indexes pushing, so 50 basis point, that's hard to spin as anything but bullish. Whether or not, I think longer term it's not going to be. I talked the fundamentals of that today. We're going to see money market rates and all that extra income people, banks and businesses were getting from parking cash goes away, but yet worst case scenario, and if my call right, is that long-term rates go up, and that kind of undoes the benefit of low rates, right? Fed stimulates with low rates because people go out and they buy car loans at 7-year car loans and boat loans, planes, trains, whatever, airplane loans, I should say, home loans, and those are things pegged off longer term rates. So let's move. So far today, the Treasury yields are up, and they have been, and they were up yesterday. And so that's one reason I think that those mortgage companies that will put out as shorts today. And again, with a lot of work to be done, you have the levels, but we'll see. And so on that, then SPY, we broke out above. Remember, on the futures, it was a downtrend line. It was about even high on the spot index, S&P 500 and SPY. We broke out, so that was the measurement yesterday when we were right here. I told you it would be about 3% upside, and so based on that, QQQ was down here, and I said, okay, so let's say QQQ, because it does tend to outperform, let's say it goes up 5% with the SPY going up 3%. It's going to put you in the bottom third of the range is what I said. So, and it also keeps you above, as I've told you. This is really my kind of line in the sand there, that gap. If they backfill that gap, the top of the gap should be resistance. Anything else will most likely have taken the SPY above my market top range. And so that's it. You just want to know my preferred scenario. Again, it was covered yesterday. I'm covering it again today. And so, yeah, there's a powerful breakout. They're buying the crap out of it today. This is the breakout above the 60-minute downtrend lines. You don't have to squint to see it. These were whipsaws. This is not a whipsaw, at least as of now. But remember the other day I said I'd love to see me some divergences here. I like to see the clean separation between the peaks to give you a trough. Like you have here. It's not a necessity. We didn't have it right there, but it is something I like to see, and that's what we have so far. And we're also at resistance right there, and that's where the market stopped today. So that's not mere coincidence. We had a 3% rally in the Qs. I often talk about that. Barring anything major, 3% is typically a safe cap if you want to short a rally. Now, you got to be careful shorting breakouts, but that's certainly an objective level to short right there, especially with the positive divergence for both a quick pullback trade, pullback to where maybe fade today's, to the bottom of today's gap. This is the gap right here. You'd still be positive on the day. Gaps, the traders will come in and buy the top of that gap, or, which I kind of like, to be honest with you, a runner trade. What's a runner trade? Short it there, put a tight stop. If it starts to go positive, lower your stop and let it run. Because as I've just talked about since yesterday, before this even happened, this breakout, that, the upside's minimal. So where are we now? So let's say I told you at most I could see the Qs. And again, if I'm right, the Qs going up about another, to that bottom third of the range, about another maybe 1.5–2%. If this breakout fails, what's the potential for the market? Well, my long-term targets that I still maintain. So you risk, shorting there. Again, if you do it like that, and you want to just sit tight, hold your nose, see if this breakout fails, meaning the breakout above this downtrend line, which, by the way, it's a weekly chart. So right now, here's the weekly downtrend line. We're comfortably above it. We'd have to drop from where we're at as I do this video, 2% just to get back on the trend line. But even if we do, then this was just an intra-week spike and not a breakout. Again, based on the weekly chart, if we park back on there. So then it's another test. What is a test? You broke it. This is where, the trend line didn't start developing to right here, but these are all ran up, kissed it, closed below it, tested it again. And depending on how the week closes, this body right now, this fat part of the candle, could be larger. Tomorrow they build on the gains, or it could be gone, and you have no body but a little doji, or even worse, would be a big reversal. Now, I don't know. I'd have to check. The only thing that's going to do that is a negative on the economic calendar. Let me check that real quick. Just go to resources. Tools of the trade, economic calendar, on Fridays. Oh, we've got triple witching. There's no economic events on there, but that leads to volatility, or quite often. Okay, just knocking them down. Covered the VIX. Covered what my expectation is, how far this breakout may carry, and then again, one of the takeaways is, okay, I showed you kind of my very open to getting up there, the QQQ in the third of the range, maybe another, couple percentage points higher, but wouldn't in the least surprise me to see this thing suddenly reverse and fail at any moment. Starting today, so far we reversed off the high, and or over the next week or so. Something about K1s. Yeah, I went on to say, look, I can't keep track of all the ones that offer issue K1s or not. It's gotten confusing. Some of the ones that used to be called ETNs are now labeled ETFs on the chart screen. So always check. Bottom line, if you don't care, it's not the end of the world. You get them, you do your own taxes, or your accountant has to just plug them in. You have to. It's a different form on the tax return. You're definitely not doing a 1040 easy with K1s. There's usually minimal, if any, tax consequence on it. They just have to kick out and report whatever kind of gains the partnership had. All right, so that doesn't matter. Just check. Bottom line, go to the website like Kevin did and check yourself on any that you might be looking to trade. I just use them because they're there to show you, they track commodities. They tend to track commodities, the ETNs. Could you briefly review the Mag 7 stocks? That's what I'll do, and I think this is the last one, and we'll take this video home. Markets are going to close in 2 minutes. Will do. I wanted to cover the Mag 7s in one of my videos today, but I had so many other things I wanted to cover that I didn't get to them, and I just figured the video would run for over an hour. I don't want to do that. Punish you guys that way with hour-long videos. They're long enough as it is. So one of the Mag 7s that stand out to me right now is Amazon, which is basically back testing here. I'll show you. Let me just pull the live chart. Do that. AMZN. All right. On this 60-minute chart, this is a nice looking chart right here. Market's on fire today, but Amazon rallied into a brick wall of resistance. That right here, it wasn't just a reaction high. It was a divergent high triggered with a sell signal. Boom, big drop. Probably double digit. Let me see the range here. Every time it's hit this level, It's dropped their last 2 times over, yeah, double digits. Double digit drop there. Almost a double digit. Another rejection off that level to drop there. Had a breakout, which proved to be a failed breakout and a major divergent high. Once the breakout failed, you can see what happened. Resistance, once broken, becomes support. They tried to get it, reject it, tried again. Perfect rejection there. So right there on scale 1 to 10, that's up there, guys. That's probably a 7 or 8 for resistance. If I had just a few more Mag 7, I almost put this out as a trade idea for you guys. Number one, I figured no one would want to short Mag 7 today. And collectively, I can't make as strong a case on the whole group. I just want to say that. But this one in particular looks vulnerable. So, you know, the way you do that, you could take a starter position here at resistance with a stop not far above, and or means and add on, or wait to add on, or wait to initiate a position on a break of this beautiful little bearish rising wedge right here, complete with the requisite, or I like to see at least, preferred negative divergences. You're usually going to get that with a wedge anyways, not always. And then on the daily chart, I also mentioned, but I didn't post that chart. I was just trying to get the reply out. Beautiful uptrend line off the lows, breakdown, back test, which I highlighted recently. That back test coincided with that downtrend line. Then we broke the downtrend line, but now this is the second back test of that trend line from below. Okay, I did what drives me crazy. I hit the pause button, can't remember where I did it. Shortcoming of this video software. I've got the little controls are off the main screen that I'm recording, so you don't really see them. I wrapped the video up showing you the breakouts that occurred today in SOX, the downtrend line I'm talking about, this 60-minute chart. Oh, I know, I was covering the fangs. I'll get to those and I'll have to redo it again, and hopefully I didn't already do that. I think that's where I stopped. But breakout in SOX is solid, you know, very impulsive. You know, you can see, and yesterday we just had an intra-period whipsaw. So it's a solid breakout above the downtrend line. However, big negative divergence right there. And that increases the odds at least of a back test and potentially an outright failure. You've got a little price support below that will come in with it if we get back tested. So if you are bullish and you want to get into the semis and you didn't want to chase today, or you want to add a little more, any pullback to back test the trend line and or that 217.40-ish support would be an objective long entry. However, I think there's good odds whether we have an initial bounce or not, the breakout will fail. So this is what I'm looking for tomorrow and into next week, is a potential failure of all these trendline breaks. That's SOX. Of course, QQQ. There's your primary downtrend line off the highs right here. Same thing. You have a little support just below it down there. So for those bullish looking to get in on this rally, you know, if you get a back test of the trend line, I can tell you it's objective. But it's also, if we fade today's pop, we're probably going to fail it. And based on the technicals, same negative divergence, my guess is we'll probably fail it. I already gave you the, my max upside expectation, and we'll see. I'll adjust accordingly if that level gets taken out. But so I think this rally fails anywhere from where we stopped today, which was resistance, really good resistance, the bottom of the gap and price resistance. And with that divergence looking pretty right, I could see that happening. There's nothing that's going to move the market tomorrow on the calendar. We already checked. I think I was recording when I checked that. Just triple witching. That leads to volatility, which can cut both ways. But there it is. So you got the negative divergence, rally resistance. We've had enough of the rally of SPY getting closer to the top of the trading range that I covered earlier, and now and then SPY, of course. Or you can look at ES, the futures. And that's what you need to see happen. There's your downtrend line in the S&P 500 futures, today's breakout. And you want to see a failure to keep it safe under these lows, to see all these reaction lows from yesterday. That's where I think it's safe to say it's not just a little whipsaw down through there, right? That's here, I'll give you the number. Approximately 56.70 or so on ES. Let's set an alert there just in case. All right. Okay, now quick run through, because I really don't know if I stop the recording before I cover the fangs. Apple, divergent low, breakout. Really, it's in no man's land. All I can tell you, it's still like all the big tech stocks, all of them, Like the NASDAQ, most of them have long since peaked. They peaked back in July, the majority of these market leading FANGs. I'm just going to cover since they did peak back then, I'm just covering the 60-minute charts. Microsoft, you put in a small but still divergent high, negative divergence on this rally into resistance here, 441.51, with the next resistance overhead right there about 446. Again, that's the divergence right there. If it starts to play out, could be the catalyst for to help cause a failure on the breakout. NVIDIA, again, my apologies if I was recording when I covered this already. Still very weak. This is was the market leader, was the everything stock, the AI bubble hype, poster child, I should say, and crowd favorite, and it's really lagging. Remember, this stock peaked back here in June. We shorted that the bearish engulfing candle right there, milked it down to the bottom, covered everything, including this one, reversed on the August 5th lows. It's been a swing trader's dream. Put these price targets down, cover long, short again at the downtrend line, objective short entries there, swing it down, but nope. Cover again, guys. We have a divergent low, bullish divergence, and a downtrend line. I give you it there, both on that was the uptrend. The primary uptrend line was hit there, and then the secondary buy signal on the breakout. We got this, and then I told you this is my reshorting zone, my latest area to get back short, anywhere from the bottom up to, but not above the top of that purple box right there, which will be the downtrend line. Obviously quite bullish if NVIDIA breaks above that level. You also had, again, maybe I covered this earlier. I know I covered it. I just don't know if the video was recording, an almost divergent high, almost equal high with the indicators lagging pretty severely. So this is, to me, a little bit of a tell on the market. There's the uptrend line. Like I said, and when this uptrend line goes, it's going to be no bueno for NVIDIA. Alphabet, primary uptrend line, breakdown, back test right there. If the primary uptrend line, 60-minute, that's off that big divergent high. Beautiful. Just what a beautiful little setup right there. We have that sell signal there. Biggest drop in a couple of years, at least, in Alphabet, all telegraphed by the technicals. And then we put in a divergent low. We're rallying, and we're right at a big resistance level, about 163. It's this gap right here. They tested it, bought it, tried to recover it. And so this is, net bullish if we can break that out, at least near term. And if we get rejected here, especially if we take out the lows, that's going to be bearish. On the 60, it looks like this little divergent low we're coming off of at resistance. You can freeze the video here. You can see some of the near term. I'd have to update this. Yeah, let me do that right there now. That looks good. Those are the overhead resistance levels. If this one has a little more juice. Amazon, I already covered. I believe I covered that. Beautiful bearish rising wedge at resistance. And I even posted a chart in the comments section of this one here. So nice resistance where we've gotten double-digit drops in Amazon the last few times it got there. This was a double-digit drop, almost a double-digit drop, and so it's objective to short here, but it would have been an official trade idea if I could have made a stronger case to short the remainder of the FANGs. Right now, there's no signs of other than QQQ hitting resistance today, but just watch this one. If it breaks that level, that's going to be a sell signal. Meta. Divergent high right here, this most recent high on the 60-minute chart. It broke above this trading range, but it's been doing that. It had a breakout a little higher. It keeps making these marginal new and divergent highs, and every time it does, boom, it gets smacked down. It's just like the MO of this thing, and so we'll see if that one holds or not. But I could tell you that's the negative divergence increases the odds that it's going to fail sooner than later. The breakout, and send us back down into and probably to the bottom of the range. Broadcom, I think I already covered that at downtrend line resistance right there after hitting these 200-day moving averages. Highlighted both of those as areas that buyers are likely to step in, and they did. And now you have this downtrend line. So this one's in an important technical juncture. You have a big triangle pattern here. Obviously bullish if it can clearly break that level out, bearish if it gets rejected, but especially bearish if it breaks the 200-day moving averages, which they have bought twice recently. And then Tesla is kind of a mess on the daily chart, But on the 60, you got a divergent high at gap resistance. This is a big gap right here. That resistance, negative divergence. Divergence is not a sell signal, but a trend line break below there would be, or a rejection off the gap resistance would be bearish. But more so, you want to see this trend line go. Otherwise, it's going to power on through there and probably want to take that high out. Okay, so that's it. Maybe next week or tomorrow I can make a stronger case to, short QQQ. We have a couple things at resistance today, reflexive pullbacks. We'll just have to see if this breakout sticks and builds upon next week and or tomorrow, or if it fails. Okay, I will be wrapping it up here. I'll try to watch the video later to see if I left anything out. Like I said, I hate when that recording feature, I pause the video while I'm recording to collect my thoughts and move to the next charts. And then sometimes I'll click the pause button and it just doesn't take, and I don't notice that. So, all right, let me get it out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.